If you've ever run a business, you know the feeling, right? You're just drowning in a sea of invoices, bills, and payments. Well, today, we're going to demystify a simple, but honestly an incredibly powerful accounting tool that brings some serious order to all that chaos: the control account.
But first, let me ask you something. When you look at your company's finances, do you see a nice, clear, simple picture? Or is it a little more like this? Just a chaotic mess of individual transactions that makes it almost impossible to see what's really going on.
You know, if you're trying to track every single customer and every single supplier account one by one, you're not just creating more work for yourself. What you're really doing is creating a massive blind spot where cash flow problems and some really costly mistakes can just hide out and get bigger.
But what if I told you there was a way to get a high-level summary, kind of like a financial dashboard, that brings all of that chaos into perfect, crystal clarity? Well, there is. Let's meet the control account.
So, what is this thing exactly? A control account is basically a master file in your main accounting book, which is called the general ledger. It doesn't get bogged down in all the tiny details. Instead, it shows you one single, beautiful number, the total balance of a whole group of smaller, related accounts.
Honestly, the best way to think about it is like the dashboard in your car. You don't need to pop the hood and check the oil level every 5 minutes while you're driving, right? You just glance at the gauges. A control account does the exact same thing for your business's finances.
And this brilliant little concept is usually applied to the two most critical flows of cash in any business: the money that's coming in and the money that's going out.
So on one side, you've got your receivable control account. This is your money in dashboard. It shows you the grand total of what all your customers owe you. It's basically every single customer invoice all added up into one clean number. And then on the other side, you've got the payable control account. That's your money out dashboard. It shows the total amount you owe to all of your suppliers. Pretty simple, right?
Okay, so it sounds organized, but why does this really matter? I mean, why should you care? Because this isn't just about tidy bookkeeping. Using control accounts gives you 3 huge wins for your business.
At its core, the whole purpose here is threefold. It helps you detect errors with pinpoint accuracy, it saves you a massive amount of time, and ultimately, it gives you much tighter control over your company's financial health.
Just think about it. Instead of digging through hundreds of individual accounts trying to find one little mistake, you can just compare 2 totals. It saves you from that mind-numbing line-by-line checking, and this high-level view lets you make smarter, faster decisions. For instance, if you see your total receivables ballooning at a glance, that tells you it's probably time to chase down some payments before it turns into a real cash flow crisis.
And now for the magic trick. How do we actually use this thing to find those errors? Well, it all comes down to a process called reconciliation, which is really just a fancy word for a super important double check.
The whole goal here is just so simple. Does the summary number in our control account actually match the sum of all the little individual detailed accounts it's supposed to be tracking? Let's see how it works. Okay, so let's say our receivable control account, our financial dashboard, tells us that our customers owe us a grand total of $15,250. That's our big picture number. So now we got to dive into the details. We go to what's called the Subsidiary Ledger, which is just the book with every single individual customer account, and we add them all up. You know, customer A owes this much, customer B owes that much, all the way down the list. And after we add every single one of them up, what do we get? $15,250, the exact same number. Perfect. The summary matches the details. This is what we call a successful reconciliation. And let me tell you, it is a huge sigh of relief. It means we can be really confident that our books are accurate and they're balanced. But here it is, the most important question of all. What happens if that dashboard number was $15,250, but when we added up all the little details, we only got $14,250? Boom. That mismatch is an immediate red flag. It's like a giant flashing light telling you that there's an error somewhere. Maybe a missed invoice, a double entry, a payment posted to the wrong account. The system has worked perfectly. Now, it hasn't fixed the error for you, but it has pinpointed that an error exists, saving you from a much bigger headache down the road. So you see, a control account isn't just about accounting. It's about gaining clarity and confidence in your numbers. It turns a potential mess into a clean, easy-to-read dashboard. So the question I want to leave you with is this: what financial blind spot in your business could you eliminate by creating a better dashboard today?